Okay, let me share my screen. So as I've already mentioned, first 3 live session will be a free demo session. Today was Sunday. That's the reason why we kept the timing a little bit in afternoon. Later on, all the lectures will be in the morning time only. Okay, just a minute. Yes. Yeah. So all the lectures will be in the morning time. That is part one will start from 7 a.m. in the morning. We'll see how much enrollments are coming. Based on that, we can shift the timing maybe to 8 to 9 or maybe 7 to 8. But just keep this thing in mind that your timings will be morning 1 hour. Monday to Friday, you have to provide at least 1 hour for live lectures. Saturdays and Sunday, we will having doubt solving plus MCQ mock exams. Okay. So those who are also joining from my previous batch, you can also continue in this current batch. Yes. And this subscription which you are going to take will be until you clear your exam. That means even if you want to attend the lectures in the next batch or maybe later, you can attend that if you have missed any sessions. Okay. Second thing, you will get the recordings. Those recordings can be accessible until you clear your exams. Okay. So let's start with our syllabus. In our part one, all the topics are related to individual taxation. Who are going to file the return? What is the filing status? Okay. What all incomes will be included in the return? What all benefits will be given to the individual person? Okay. From individual's perspective, part one, individual taxation is syllabus is designed. Okay. Part two will be for your business returns, all the corporate returns, where profit and loss, balance sheet, those kind of terminologies you'll have to understand in part two, right? In part three, it's a totally representation, how you're going to represent in front of IRS. So after completing part one and two, you can go for part three. Or if you're good with the theory portion, you can start with two parts together. You have enough time, plus you want to appear for two parts together, you can go for part one and three together. Okay, so this is what we suggest to normal people. Everyone, please mute yourself. So whenever you have a doubt, you can unmute, raise your hands, and ask the queries. Okay. So there won't be any disturbance. I think most of the people have joined now. Yeah. So I'm just going to explain a brief understanding of the syllabus for the part one. Firstly, in the first chapter, we are going to understand who are going to file the tax return, who are mandatorily required to file the tax return. Being an individual person, in India, we have different ITR forms, right? ITR 1, 2, 3, 4, 5, like this. But over there, we have only two bifurcation. One is individuals and second is corporate. Okay. Individuals 1040 return is applicable. Here, these individuals are again bifurcated into few categories. Are they single? Are they married? Okay. Are they going to file a separate return even they are married? So that is what we will understand in the filing status, right? Also, in US taxation, there are lots of benefit available for dependent. If you have a child, if you of the taxpayer and the spouse are taking care of some dependent. Okay, so dependent doesn't mean only child. It can be your grandparents also. Okay, so you are incurring some expense for their living expenditure, for home expenses, right? Rental expense, for providing food, clothing, and those all things to the dependent. We're providing education for them. Okay. You are also providing them the dependent care. Okay, so for that there will be some credits which will be available. But before moving to the credit, first we will understand the definition of dependent. Okay, so that is why our syllabus is designed in such a manner. First of all, we'll understand the basic criteria, terminologies of whole 1040 return. And in credits chapter, we will see that there are a lot of criteria which are applicable based on the qualifying child, qualifying relative criteria. Means exactly the similar criteria, you can link these two topics. That's why just after filing requirement and filing status, we will start with the second important chapter, that is Credits. Credits is where you are going to incur some expenditure and IRS is going to give you the benefit in the form of reduced tax liability. Okay. Then we are going to understand what all things are going to be considered in your income. Okay. If you are a salaried person, if you are going to earn some passive income, if you're going to earn some income from selling shares and securities, so that is capital gain, that is schedule D in the 5th chapter. If you are planning some retirement contribution, okay, being a salaried person or being a self-employed person also, if you're saving something for your retirement benefit, still there are some tax consequences for that. Like if you're contributing, if you're saving something in a retirement account, you can get a benefit which is given by the IRS. And when you withdraw this amount from the IRA account, IRA is individual retirement account, it will become taxable for you. Okay. So the I can say all the criterias, consequences, limits you need to remember in the part 1. Only one exception is you don't have to remember the phase out limits. Okay. Wherever it is necessary, I'll always ask you to remember the limits. Wherever it is not necessary, I'll just tell you that please skip the phase out limits in whatever topics we are going to learn. Okay. So this is the gross income which we are going to start after that. And later on, I have set a sequence of schedule wise. Okay. Schedule C, D and E. So C is for business income and expenses. D is for capital gains. Okay. All the capital gains which you're going to earn by selling some property, or let's say you're selling some shares or securities, or you're selling any capital asset, you will be liable to pay the capital gain, right? After that, there is a schedule E, that is a rental income and losses. If you are having an investment property, it's not your day-to-day business, but you are just renting out your property for earning some income. So all the income should be reported on a schedule E. Okay. Loss limitation. If you're doing some business, or let's say you are having a rental property, but it's not necessary every time you will have a profit. Sometime it can happen there is a loss. Okay. So this loss can be carried forward to the next years, but in next year it can be offset against the income. Okay. So there is a rule that passive loss can offset against only passive income. Active loss can offset against only active income. Okay. So the setting of rule we will see in the 7th chapter. After that, we have adjustments to income. Okay. So what do you mean by adjustments to income? IRS has given this, benefit to all the US citizens, that if you're investing into IRA account, retirement account, or if you're investing into the health saving account, or if you're receiving some benefits from your employer, that is moving expense from one place to another, this all incomes can be considered as an exclusion. Okay. So we will see that adjustment to income is something from your income. First, you need to include it, and then later on, you can get a adjustment to this income. Same way, there will be some income exclusions. Okay. That is also being considered in this chapter. Next is itemized deduction. Now, in India, this doesn't happen. Being an individual taxpayer, if there are some personal expenses, you can't take a deduction on your tax return, right? Let's say you have paid your real estate taxes. Okay. Your bills, utility bills, your real estate taxes you have paid, you're paying interest on your home loan. Okay. So this all are kind of your personal expense which will not be allowed. But in US, in 1040 return, they are allowing specifically 5 deductions as a allowable deduction, even though those are personal. One is medical. Okay. If you're incurring medical expense for yourself, for your family member, for spouse, for dependent, then you can consider it on a schedule A as an itemized deduction. Okay. If you're paying state, local and foreign taxes, it can be allowed as a deduction. Interest expense specifically for mortgage home loan. Okay. On that, if you're paying the interest, you receive a 1098 form. Okay, based on that, you can take the deduction, right? Charitable contribution. See, in India also there is this form, right? Section 80 deduction is there for some of the items. But here, charitable contribution is something which is donated to a recognized institute. Okay, and there is a calculation, sum of the portion of your AGI. So all these things will have a AGI limit. What do you mean by AGI? Let's understand first the AGI. Okay, see, this is the sequence. This is the sequence which you will see in your tax return. First of all your gross income will be considered. Now, this gross income includes your earned plus unearned. Please remember these two terminologies which are most important in your whole part 1 syllabus. Earned means where you are actively involved in earning that income. One best example is salary. Okay, you have to be there on daily basis. You have to give your input on daily basis to earn the salary. Even if you're not providing your input, or if you're not available for, let's say, 5 days, 6 days on job, your salary is deducted for those 5 days, right? So that is earned income, where you're actively involved. Same with business income is what? Earned income. Okay, wages and salaries is your earned income. Now, what is unearned income? Where you are not going to be actively involved. Best example is interest, dividend. Okay, you just invested certain amount in a company, in a corporation, and they are running their business. And once they earn a profit, they will give a certain portion of it in the form of dividend to the shareholders. So those dividend, interest, rental property is also unearned. Rental property, if it is just an investment, if your main business is renting business, that will become your earned income. But it's just an investment for you, then it will become unearned income. So take a total of earned plus unearned income. That is known as your gross income. Now you have to reduce certain adjustments. What are these adjustments? See, let's see what are the gross income first, then we'll move to the adjustment. Wages, okay, interest, dividend, state tax refund. Whenever you pay extra tax to the state government, in US taxation, we have to file 1040 at 3 levels. Third level is optional actually. First is at federal level, okay, at a central federal level. Second is we will file the return at state level. From whatever state you are earning income, you have to mention them the state incomes. Okay, let's say you are also earning from New York, you're earning from California, you also have some sales, or you're selling some goods and services in New Jersey. Okay, so all this state return will be filed along with the 1040 federal return. Now, third return is city return. Just like in India, we have GST, right? GST is at state level. Municipal taxes are based on your region, right? Let's say I'm in Ahmedabad. So Ahmedabad Municipal Corporation, I will pay the real estate taxes, means municipal taxes to them, right? So federal, state, city taxes will based on in which state you are located, and are there any city revenue collection department where you are going to pay the taxes. Okay, no need to remember any tax rate, any slab rate for your exam preparation. Our EA exam is totally MCQ based. Okay, only 100 questions you have to think properly and answer this 100 question, right? It will be 130 marks. You need to achieve 105 marks. People usually, just a minute. Yeah, just hold on a minute. Yeah. So the thing is, usually people easily get 104, 103 mark. The extra 2 mark where they lost is the conceptual clarity. Okay, there will be few questions which will be very tricky if you're conceptually not clear. If you mug up the things, you can easily get 100 marks, 101 marks. Okay, the people even are not able to clear the exams at 104. Okay, the thing is, very tricky questions will be asked. Only 5 to 6 tricky questions will be there, but that will carry a huge weightage. Okay, so make sure when you're sitting in the class, your thinking process should be open. If you have any question, ask at that time only. Okay, everything should be logical. It should nothing be like that okay, this is the process taught by the ma'am and this should be only the process. If you feel that how it is done, why it is done, just ask the question. Okay, see, wages, interest, dividend, state tax refund, alimony received. Alimony is something when a taxpayer and spouse are divorced, right? And taxpayer has the have the divorce agreement with the spouse that he will have to pay certain amount even after the divorce for fulfilling the day-to-day expenses of the spouse. So that is a alimony. If a spouse is receiving the alimony, there are certain criteria we will see in the gross income chapter, that in this situation she will include it in the gross income. There are certain criteria. I'm not going into the criteria right now. I'm just explaining the overview of it. Okay, same way there are business income, capital gains. This is schedule C, schedule D. IRA income, if you are receiving it, if it's a distribution. Okay, and if you have breached certain conditions, then this distribution will be taxable. Okay, same way pension, annuities, when you are going to do some contribution for your retirement purpose, and later on when you start receiving pension after a certain age, okay, it will be considered as your gross income. Rental income, schedule E. IRA stands for individual retirement account. Okay, individual retirement account, and this is actually the most important topic in our part 1, right? There will be certain restrictions which you need to consider while reading. Based on that restrictions, even if you have breached those restrictions, it will become taxable. Else certain amounts are non-taxable, certain amounts are taxable. There are different types of IRA. Okay, being an individual tax preparer, you need to understand the types of IRA where the client is investing. Is it a traditional IRA? Is it a Roth IRA? Okay, is it a 401k? Is it a SEP plan? Okay, there are different types of IRA. For our part 1 exam, only 2 types are important, traditional and Roth, and rest types of IRA will come in part 2. Okay, from employer's perspective, it will be there in part 2. This from the individual perspective, right? Then K1 flow through income. What is K1 flow through income? When you are a partner or a shareholder in some corporation, partnership firm or S corp, if you are a partner or a shareholder. So partnership firm will file a 1065, but they will not pay tax. Payment of tax is not allowed if you file a 1065, because the income will get flow through to their partners. Means their partner are going to include the income, their share percentage, whatever percentage they are going to share in the income, they will include that much percentage in the 1040, and this will form a part of your gross income. Okay, same way for the shareholders also, 1120S. So 1065 and 1120S, this both are pass-through entity, and they will pass their incomes to the respective partners and shareholders in their profit sharing ratio. And they will receive a K1. Shareholder and partners will receive what? K1, and that needs to be a part of your gross income. Okay, only one more return is there, that is 1120. That is a C corporation return. This is not a pass-through entity. They will straight away file a tax return and pay 21% taxes. No need to include it again in the members this 1040 return. Okay, Second thing, if they are going to distribute something, it is called as a dividend. Okay, the dividend will form part of your income over here. Clear, guys? If you have any question, you can easily unmute yourself and ask me at that point of time. Okay.
Hello.
Unemployment. Yes.
Shruti, actually, I have a question regarding this C corporation.
Yeah.
So, like you mentioned that they have dividends in the form of income, which we include in 1040.
Yeah. Correct.
So, do we need to pay taxes on dividend also and on C corporation also? So, it cannot
Yes.
be taxes like double taxation over here.
Yes, it is double taxation. It is mentioned on IRS side also. It's a kind of double taxation. C Corp will pay 21%. Okay.
Mhm.
And after tax, we call it profit after tax. If this is distributed to members, they will again include this dividend in their 1040 return over here. Now, this dividend percentage of tax is different. If it is a ordinary dividend, if it is a qualified dividend. Qualified dividend will have a some less tax rate, but ordinary dividend will considered in their normal taxable income. Yes, it is a double taxation. It is mentioned on the IRS site also. Okay.
Mhm. So, we cannot, is there any way to save this double taxation?
No, see, you can convert your C corp to S corp. Okay, being a S corp, you don't have to pay the tax. But when you take a distribution, you have to make sure you are taking the distribution within the limits. The distribution contribution topic will be there in part 2, where you will understand very well up to what
Mhm.
amount you can take the distribution. Okay.
Okay, so
Anything
there
in
is a limit.
excess, yes, anything in excess, if you're going to take, see, S corp is simple thing. Whatever is your basis means, let's say you brought 100,000 in the business. Okay, now
Mm.
you earn some profit, it will be added, it will get accumulated in this basis. Or if you have a loss, it will get reduced from the basis. Now this is your limit. Up to your basis only you can take a distribution. Above this, if you're taking distribution, then it will be taxable in your 1040 return as a capital
Okay,
gain. Yes.
okay, got it. Yeah, thank you.
The
Okay.
by destination, you mean, is it a dividend?
Yes, dividend
Oh,
distribution for C
oh,
corp. Yeah.
okay. And
For S corp, we will not call it as a dividend. Huh? For C corp only, it is called as dividend. For S corp, it is just a normal distribution, shareholders distribution.
got it.
Don't get confused between C and S corp. Both are totally different. Okay.
Yes, please.
This thing will be there in part 2 when we start with the next weekend. We will have a part 2 demo lecture. There, all the types of entity I will explain. You can just attend it even if you don't want to go work for part 2 right now, but just attend it for a basic understanding. Okay. See, social security benefit, when you are earning wages, your employer is going to pay payroll tax. Okay, in India we have TDS, right? Same way, there the employers are liable to pay the payroll tax. Here, the whole TDS has been deducted from our salary, right? Over there is an option in payroll tax. We have three things. One is federal income tax. This you can call exactly TDS. Second is FICA taxes. Okay, what is FICA taxes? Federal Insurance Contribution Act. Based on this, there are Medicare and Social Security. Okay, now Medicare taxes are contributed 50% by employee and 50% by employer. The percentage limits, how much they needs to contribute, everything you will see in the gross income chapter on the wages topic. Right now, I'm just explaining why, from where the social security benefit will come. This is actually government is going to pay you social security benefit once you retire. After a certain age, you will start receiving SSB. Okay. Same way for social security, 50% will be paid by employee and 50% will be paid by the employer. Now, The US system is actually tax system is very great. See how you'll get the benefit indirectly. Federal income tax, which is deducted, you will get the benefit on your 1040 return. Okay, whatever will be your tax liability, you are going to, okay, the here I'm not mentioned. So whatever is your tax liability, you're going to get a benefit of reduction in the tax liability. Whatever federal income tax you have paid, okay, on your salary, your employer might have deducted, they will issue you W2. On that W2, it will be mentioned that during the year, how much FIT was deducted by them. You just have to take a benefit of it on the 1040. Okay, means after preparing the whole return, after entering all the information, there is one tab where you need to enter already withheld taxes. They call it as a withheld taxes. Okay, so federal income tax withheld, you need to enter for getting the benefit. Now second is FICA taxes. Employee which employees income amount which has been deducted, they will not get the benefit anywhere in the tax return. Same way with the social security benefit, the social security taxes, sorry. But once they retire, they will start receiving the benefit if while working their social security taxes were deducted. Okay, so this is an indirect link. Medicare, no one is going to get the direct benefit, but yes, everyone gets a deduction for personal medical expense on Schedule A, right? So this is how whatever tax you're paying to the government, they are indirectly utilizing it for your benefit only, for the taxpayers' benefit only, right? That's why the US tax system is very simple, sorted, and everything is linked. Everything should go in a logical manner. There's nothing to mug up the limits. There's nothing to mug up the phase out limits or the criterias or anything. It's everything logical. Okay, we'll do that. Next is other income, anything which is not falling under the above category. One example is gambling income. Okay, if someone is going to win a big lottery or going to have some refunds, okay, from state tax refund or federal tax refund, okay, so all the other income which is not mentioned over here will be mentioned in other income. Okay, so this is what our gross income. Adjustments will have certain limits, certain criterias. In whole adjustment chapter, you will have to remember the limits. I'll tell you the trick to remember it. But phase out limit, you don't have to remember. See, what is the difference between limit and phase out limit? After reducing this gross income minus adjustments, there is a adjusted gross income. This is called as AGI. Okay, based on the AGI, you will get the credits. Here you can see tax credits. If your AGI is higher, you will get less benefit. Okay, because US government doesn't want the higher earning person to get higher benefit. If your AGI is higher, you will get a lesser benefit. Same way, if your AGI is less, you will get higher benefit. Okay, so let's take an example for education loan interest. Okay, student loan interest, they get a deduction. But the thing is, you should have a AGI of less than $80,000. Then you can take whole interest paid for your student loan as a deduction. Okay, as soon as your AGI is more than 80,000 but up to 90,000, you can phase out your deduction. That is why we call it as a phase out limit. Phase out means, let's say my interest payment was $2,500, but my earnings are falling between this two, that is 85,000. Okay, so this will get phased out by certain proportion. How you need to calculate? What is your actual AGI? 85 minus lower limit, that is 80, divide by lower minus upper limit, that is 10,000. So you will get a percentage. This thing you can draw it on a timeline and understand the deduction. Okay, same calculation will come in each and every topic, even for all the credits topic, all the adjustments topic. Okay, there can be certain IRA contribution which is limited to a phase out calculation. Okay, so second thing you need to remember is Calculation part, that much will not come in exam. They will ask only conceptual question. They are not here to test your mathematical intelligence. Okay, they are here to understand whether you know all the criteria or not. For taking a dependent as a qualifying child on your tax return or a qualifying relative, what are the conditions? That is the main thing. Okay, so coming back to this point, gross income minus adjustment, that is where we come as we'll get the AGI minus standard deduction or itemized, whichever is higher, usually people will take. Standard deduction is just like a basic exemption limit. In India, we have basic exemption limit, right? If your income is within this limit, you don't have to pay any tax. So same way, basic exemption limit is flat. Example, I'm saying flat 2,50,000 is there in India, okay, or based on the age 5 lakh or 2,50,000 or 3 lakh, whatever is the amount. Same way here, the standard deduction will be based on filing status. Are you going to file as a single? Are you going to file as a married, filing joint return, married, filing separate return, head of household, or qualifying surviving spouse? Okay, so this 5 category are the filing status. First, decide what filing status will apply to you. Based on that, every filing status has a different standard deduction. Okay, this is, I can say, fixed amount given by the IRS, or you can compare it with the itemized deduction, which was our personal expense. If you guys remember, Schedule A, 5 personal expense, medical expenditure, interest. Okay, then we have is medical interest, charitable contribution. Okay, and other itemized deduction are also there, but recently, like, those are not applicable after 2021. Okay, but still we will see those topics in detail when we start with the itemized deduction topic. Now you have to take whichever is higher, whichever is more beneficial. This amount you will receive as taxable income before QBID. Okay, what is QBID? Qualified business income deduction. Qualified business, as the word says, business income. If you are running a business, okay, being a sole proprietor, if you are running a business, or if you are a partner in a partnership firm, or if you are a shareholder in a escort, okay, and you are actively involved in that business, you can get a qualified business income deduction. Okay, this standard deduction, just like we have a standard deduction for individual income, same way there is a standard deduction limit given for business incomes. So from this you can easily deduct that limit for QBI deduction. Okay, this is a huge topic, but not that important. Straight away I'll tell you one thing. Straight away, 20% of your qualified business income is a QBID. That's it. It's a huge calculation topic. We will do it, but the calculation part is not asked in the exam. As I mentioned, it's already MCQ based exam, and those calculation are so used that it's a 5 mark, 6 mark question weightage. Okay, so this is the one thing. Then you will receive an amount that is taxable income. On this taxable income, you will calculate the income tax. Okay, federal income tax. Out of this, you will reduce the credits. Any other taxes which you have paid, here you will reduce the withholding taxes, right? Being a salaried person, if your federal income tax is withheld, you can reduce it over here. Or if you have paid a estimated taxes, it can happen that you are paying some estimated tax in, like, it's a kind of advanced tax. In India, we call it as advanced tax. So for 2023 tax year, you have already paid tax during the 22 quarterly, quarter 1, quarter 2, 3, 4. Every quarter you might be paying a certain percentage in the form of estimated tax. So you can take a deduction from this total federal income tax. Okay, these are the payments, that only, like the estimated tax payment. Other taxes are if any withholding has been done. So this is the tax due or refund which you're going to get on your tax return. Any question, guys? Anyone?
No.
Okay. Yes. So this is only your syllabus, which I have explained in a very summarized manner. Now we need to understand the criterias of each and every topic. How much is deductible? How much is non-deductible? How much is taxable? Non-taxable? Okay. How much is tax exempt? In income also, we will see that there will be some of the income which is tax exempt. Okay, there will be some income which will be considered for exclusions, income exclusions. Okay, clear guys? I hope only the format is clear to everyone how our 1040 return will flow through. Okay, now let's start with our very first chapter. I'm directly starting with the see, this is the book which you're going to get. This is our regular book. Summary book is a different book. We usually provide, once you enroll, we provide 2 books. This is our regular book which we are studying right now, and this is a summary book from which we are just going to revise it. Okay, and the revision lectures already are getting uploaded on YouTube. Maybe tomorrow it will get uploaded. So see, let's start with the first one, that is filing requirement for individuals. Who must file the return? First, you need to understand that the filing requirement is only there for US citizen. Yes, any question, anyone? Okay, so it should be applicable. The filing requirement is for US citizen, okay, or a US resident, right? And all the income, once they are US citizen, US resident, all income earned from US or outside US will be considered as a gross income, and they will have to file the return if their income is going above the base amount. Now this base amount is nothing but your standard deduction. Okay, these are the limits of your standard deduction. As soon as your income is more than standard deduction, you have to file the tax return. Okay, now based on your filing status, right? So generally, a taxpayer must file a return if his or her income is equal to or greater than the sum of standard deduction amount, okay, which we will see right now over here, except for MFS, plus any additional standard deduction if a person is having age of more than 65 or a person is blind, then they can get a benefit of additional standard deduction. Okay, so being a single, you get a benefit of $13,850. Let's say a person is earning just $10,000. He can file the return. He should file the return actually to get a refund of withholding taxes. Okay, let's say the 10,000 is from salaries and wages. Okay, and the salaries and wages are withheld by the employer. But when he files the return, there is no taxability because he has the benefit of standard deduction. So he will get a refund of whatever taxes are paid on salaries and wages. So usually we recommend. Yes, Sindhu, any question? Sindhu, your voice was not audible. Okay, if you have any question, just raise hand so I can identify if you have a question. Okay, you can ask by unmuting yourself and ask the question. All right. No worries. I can understand. See, so standard deduction is allowed to each and every individual, but just based on your filing status, you have to determine how much amount of standard deduction you will be allowed. Okay, so along with this, if a person is blind, if a person is age 65, these limits are for individual incapability. A person is more than 65 also and also blind, so he will get 1850 plus 1850 2 times. Okay, let's say a person is filing a joint return, so taxpayer plus spouse, both of them, taxpayer plus taxpayer will, let's say, is 65 plus blind, spouse is also 65 plus blind, so they will get this 1500 on per individual basis, individual incapability. So they will get 1500 plus 1500, and for spouse also 1500 plus 1500. So they'll get an extra standard deduction of 3 plus 3, 6,000. Okay, got it, guys? So this thing, they are not going to ask the limits, okay, but you should be aware about it, that this benefit is based on individual labor. Okay, see, so who must file? Anyone who is going to exceed the standard deduction 13,850. Yeah, these are 2023 limits applicable for our current exam. 27,700, 13,850 for MFS, HOH, qualifying surviving spouse, and one more important is dependent of another. Okay, let's say the taxpayer and spouse, they both are planning to file a return, but they have one dependent child who is also earning. Okay, so they are having a dependent on their MFG return. Okay, they are filing a married filing jointly return. They have a dependent. He is earning actually. He might be earning a wages income. Okay, there this is very common. The dependent, the child, they work in a TV shows or some normal earnings they can have through active participation. So they can have earned income. They can also have unearned income. So this unearned income will have a standard deduction limit of $1,250. Okay, and one more 1,250 will be excluded from unearned income, and it will be considered at a child's marginal tax rate. Okay, child's marginal tax rate. And here, after reducing the standard deduction, after reducing this amount, whatever is the remaining portion will be considered at a parent's marginal tax rate. Clear, everyone? Got it? So this thing we will understand in detail. Yes,
Okay,
Priyanka.
marginal tax.
Sorry.
Can you repeat it again?
Okay. See, I'll take one example for better understanding it. Let's assume the taxpayer and spouse are filing a joint return. They are having a dependent on their tax return as the child as a dependent. Okay. Now he is earning earned income of 12,000. He is earning unearned income of let's say 7,000. Okay. Now we will see the requirement. Being a dependent, if your earned income plus 400, okay, is above $1,250, then dependent will have to file a separate return. Okay, so let's check. His earned income is what? 12,000 plus 400. Is this going more than 1,250? The answer is yes. So dependent will have to file a separate return. But how much he should include in his return and how much his parents will include in their return? So the simple thing is, where he is not personally involved, that is unearned income, only this much portion will be included in the parents' return. Means they will be liable. This 7,000 is liable for the parents' marginal tax rate. Means when they file this MFG return, whatever slab rate they are going to fall, same percentage will apply on the 7,000. But one exception is, from this 7,000, 1,250 is the standard deduction that will be allowed. Okay, minus 1,250 will straight away go to the child's tax return as a unearned income. Okay, so 2,500, after reducing the 2,500, whatever is remaining, 5,500, sorry, 4,500. Yeah, this will be applicable in, this will be considered as a unearned income in the parent's tax return. And the child will file a return with 12,000 as earned income and unearned income of 1,250. Okay, and child is going to apply the standard deduction based on his filing status. Yes, Sunakshi.
Siddhi, so one question is that is there an age limit of the child? And second is that why are they doing it like this? Like, what's the advantage when either one of the parent or the child could have just, because ultimately they are going to reduce or pay tax, right? So why are they dividing it into two? This 1250, I
Only one logic is there here. This unearned income, okay, the child might be earning this unearned income from investments. Whose investment? It can be their parents, right?
okay.
So that is the one scenario. And it is not necessary that every dependent is having earned income and unearned both. Some dependent are going to have unearned income. So that is the reason why they'll get a benefit only up to 2,500, and rest will be considered as taxable in the parents' return at their tax rate.
Okay, so basically they would be paying a higher tax.
Yes.
Yeah, okay.
So
And is there
they
an
will-
age limit?
no. We are going to learn the dependent topic right now. So there will be qualifying child, qualifying relative, or
Okay.
those dependent. Yes. Any other question? All right. Naresh, you have sent me a message in personal. Naresh, that is not possible if I put the phone on the flight mode. Actually, it's not like that. Only the students are communicating with me. There are other clients and other work are also going on. So once I end it, it straight away goes in the forwarding manner. So I can't put it on the flight mode. Okay. Sorry for the disturbance. Anyways, I'm repeating the topics. Will not face any lag between the two topics. Now let's continue. So these are the applicable standard deduction limit. No need to remember, but if you can remember, it's good enough. Not compulsory. Okay. So marginal rates are something which are given over here. It starts from 12% based on your taxable income. See, this is your taxable income after calculating the whole income minus adjustments, minus credits. You receive a taxable income. Okay, on that taxable, before reducing the credit, before reducing the credit on that taxable income, you have to multiply this percentage. Okay, just like in India we have slab rates, same way over there we have the slab rates up to 11,000. It's nothing taxable above 11,000. You are having a 12% tax rate. So 12%, 22, 24, 32, and 35. These are the slab rates. And same way you'll get a benefit twice. Just multiply it into 2. So being a MFJ filer, you will get a higher benefit. Okay. So the lowest rate is 10% for income of single individual who is going to have 11,000 or less. Okay, less than 11,000, your tax rate will start at 10%. Got it? Now, when you're going to file the return, everyone might be aware about it, that it's 15th April. The fourth month, okay, 15th day of the fourth month. Okay, being a individual, you will file the return on this date. For your part one, you just need to remember from the individual's point of view. No need to consider any corporate return tax deadline or anything. Okay, so this is the deadline. Extension can be allowed if you're not able to file the return by 15th April. Okay, let's say due to any XYZ reason you don't have the enough documents, or you are not able to recall the documents, or you didn't receive the W2 from your employer, or some changes are going to happen, then you can easily extend it free of cost. There's no penalty or anything. Just one condition there is, you need to file a estimated tax. Okay, just estimate your income during the whole year, pay a estimated tax while extending the return, and your return can be extended by 6 months, that is 15th October. From 15th April, if you calculate the 6 months, it is 15th October. It is automatic 6-month extension will be available. but only the condition is you need to pay the estimated tax. If you don't pay the estimated tax, the consequences are explained in part 3. Part 3, the whole scenario is about penalties, what are the do's and don'ts, being a client, what you should do, what you should not do, being a EA, after becoming EA, what are the things you cannot approach to the clients, what are the confidentialities you need to keep in mind. Okay, you need to sign a due diligence form, and all those compliance thing will come in part 2. Okay, so when you fail to pay the estimated tax, and while filing the 15th October return, you have the tax payment, okay, tax due, then you need to pay it along with the penalty. Okay, one time abatement will be allowed. Again, the procedure is all explained in part 3. Abatement procedure, how to reply to the IRS on the notices, everything is there in part 3. So don't worry, it's not going to be part of your part 1 exams. Whatever is there in our material, it's very simple, it's given in a very simple language. See, when I was studying, I have referred a lot of materials. Okay, and I found some materials were good, but where there were loopholes. Okay, some other materials were having so much details, and the language was also tough. We were able to understand it. See, those who are good at English, good at communication, good at reading, they can easily capture the things at one go. But those like I was not good at reading, so I used to read the topic twice, thrice, and every time the new meaning used to come. Okay, due to that only I came up with the summary book where I explain everything in a simplified format, and also with the regular book where whole language is in a very simple English, not a hi-fi English. Okay, still if you face any issue, just let me know. Now the next one is payment of taxes will have to be done by 15th April while filing the extension form is 4868. Okay, while filing the extension form, you have to pay the taxes. If you delay in payment of the taxes by 15th April, every month there will be a penalty chargeable on the tax due amount. Right? Now here are just basic forms. You should remember this form. If you are starting with a part 1, you should know this basic forms. If you're going to file a normal income tax return, it's 1040. And Schedule C is applicable if you are having a business income. Schedule C is for sole proprietor running their own business. So it should be filed within the limit of 4 months from the end of the year, right? Second one is self-employment tax. If you're filing a Schedule C, there has to be Schedule SE. Being a self-employed, okay? If you were employed at some organization, that employer might have paid payroll taxes on behalf of you, right? So what IRS is saying, since you are not employed anywhere, you are self-employed, you need to pay self-employment tax. And the good thing is, self-employment tax rate is exactly same as our payroll tax. Okay, 15.3%. Exactly, Social Security plus Medicare, right? I've explained these two things a little bit. So the total of these two is also 15.3%. In short, IRS wants to collect the tax from everyone who is earning something in the form of wages or in the form of business. Only the name has been changed. This will be called as payroll tax. This will be called as a self-employment tax. Now, what the thing is here, this 15.3%, 50% is paid by the employee and 50% is paid by the employer, right? I mentioned that. So what the self-employed people will do, they will raise the question that why we are going to pay the full amount. If we were able to employ ourselves in some organization, then only 50% is our liability. Why we should pay the whole 15.3? That is the reason why you will get an adjustment to income. First, you have to pay the whole 15.3, okay, based on while filing a Schedule SE, and then you will receive an adjustment to income, the 50% portion, employer's portion. Clear, guys? So this is the kind of thing, detailed thing you need to remember. Okay, the reason behind it, what is self-employment, how much percentage we know, but why the same percentage? Because payroll taxes are being paid by the normal individual. Same thing, being a self-employed, you will have to pay. But the benefit is you can take a 50% as a deduction in the form of adjustment to income. Yes, Priyanka.
So, Siddhi, for this self-employment tax, you mentioned 50% is taxable from employer, right? So, we have any like lines on the statement, like we need to mention whole amount, then 50% will deduct of employer.
Yes, we have. See, Schedule SE will have the whole 15.3% liable for taxes, and Schedule 3 is there. Okay, Schedule 3 is for credits, Schedule 2 is for additional tax. So here your self-employment taxes will be there. But 50% of this will be allowed as an adjustment. So Schedule 1 is for additional income and additional deductions. In that additional deduction, 50% will get reduced. But when you mention the schedules, you see, it will automatically get calculated in the software. This is the theory behind it, that when you have a business income, whole 15.3% will first be considered in your Schedule 2 as a taxes, self-employment taxes, and on Schedule 1, automatically you get a deduction for 50% portion. Okay, let me show you this thing, adjustment to income.
So, Siddhi, is it not the same as like PF is being done in India?
No, it's totally different. PF, you can compare it with IRA account. When we'll do the IRA, that you can compare it. See this, 1/2 of self-employment tax will be allowed as an adjustment.
Okay, got it.
Okay, yeah. See, TDS you can compare with federal income tax. PF you can compare with the IRA. This Medicare, Social Security, the payroll taxes, these are totally new. This concept is not there in India. Okay.
No, I understand about the concept, but the way we are doing it is like PF is also by being like included the part of the income in India. Then we are getting an deduction in ATC for employee contribution. So same way we are doing for this medical and SSC, right? We have to pay it first fully, and then we will take a 50% of deduction, which is being paid by employer.
Yes, correct. We can
Okay.
compare it in that manner.
Yeah,
Same process.
just the calculation process.
Yes, calculation process is same. All right, and so SE is done. See, income tax, SE. Estimated tax. If you're going to pay a estimated tax, you need to file a 1040 ES. ES is a schedule. Okay. If you can remember this form numbers, it's good enough. Rest all form numbers are not necessary. Wherever it is important, I'll let you know. But for this particular topics where I've mentioned the form numbers, it is important. Okay. So for estimated tax, we'll be using 1040 ES, and ES needs to be filed every quarter, 15th of the end, last month of the quarter. So 15th of the fourth. So first quarter ends on 31st March. After that, 15th of April. Second quarter, third quarter, and fourth quarter is the last 15th day of first month after the. So in individual taxation, 15th Jan is the last month where you can pay the taxes. If still something is remaining, if still you feel that I need to pay more taxes, you can easily pay it anytime before 15th April. Okay. There is a difference between individual and the corporate return, C Corp, where they are going to file 21% tax rate. They also needs to pay the estimated tax. So same deadline is there, except for the last deadline, it is 15th December. Okay, so that you can just remember this thing. It's just a small difference, that till 15th Jan you can easily pay the taxes, estimated taxes. Still anything is remaining, you can pay extra till 15th April. See, if you're paying extra, that's good, you will get a refund later on. But if you're paying less amount, you will be liable for penalty. Okay, I know the estimation can be a difficult part, but that's where our role comes into picture. Enrolled agents, CPAs, they are going to use the estimated techniques, estimation techniques, to understand based on your previous year's income and based on any addition or deletion in your business, how much maximum we can pay, how much minimum we should pay to the IRS. Okay, so that is a kind of tax planning procedure which usually CPAs follow. Next is Social security and Medicare taxes and income tax withholding. So when being an employer, if you're going to deduct these three taxes, you have to file 941, 944 return with the IRS. 944 is for the agriculture. Okay. 941 is for the normal person. 944 is for the agricultural income. Being a farming income, or you are going to pay some salaries or wages to your employees, okay, in a farming business. So the due date is 30th April, July 31st and 31st October and 31st of January. So end of the quarter till 30th date of the next month, you have 30 days from the end of the quarter to file this returns. Okay. If you're filing this returns, 940 is payroll taxes. You're informing to the IRS that, look, IRS, I have deposited this much tax with the government for payroll tax. Okay. It's just an information return, I can say. Then providing information on Social Security, Medicare, you should also inform it to the employee. So employee is going to receive a W-2, which is an annual form. And that has to be done by 31st of Jan. Okay. And form W-2 and W-3. W-3 needs to be filed with the Social Security Administration, SSA. And W-2 needs to be filed, given to the employee. SSA, by SSA, they'll see W-2. Let's say I'm having 100 employees. So I'm going to generate 100 W-2s. I can't file 100 W-2 to the SSA. They'll say this is a lot of paperwork for us. So simply accumulating all the W-2 into one form, that is W-3. It's just a summary of all W-2s which you have issued, will be filed with the SSA. Okay. The deadline is same, 31st January. You need to file it on after the end of the year, within 1 month. Okay. So these are the kind of information return you can remember while preparing the tax return. And the last one is FUTA taxes. FUTA is your federal unemployment taxes. This is basically for employer who are going to hire a certain number of employees and the salary is given above certain limit. This we will learn in the wages chapter, okay, in the income chapter, gross income. More than that, okay, 7,000 is the limit. So more than that, if you're going to pay someone the salary, you have to pay FUTA tax on minimum $7,000. Okay. So it's a kind of a rule which is given by the IRS. Based on this collected funds, those who are unemployed for certain part of the year, they get unemployment compensation from the government, right? From where they will take out this fund? From those employer who are hiring the employees. And if they are paying the salary more than 7,000, on exactly on $7,000, they will have to pay a certain percentage. Now FUTA is on two bases. One is federal level and one is state level. Both will be paid 100% by the employer. Okay. Clear, guys? So 940 return needs to be filed annually, that is on January 31st. Okay. You have the option to file it quarterly also if your liability is on a higher side. If your unpaid taxes are more than $500, you can go for quarterly payment also. It's an optional thing, not a compulsory to file annual or quarterly. Clear, guys? Any question till now? Anyone? Okay, so here some informational return checklist is given. You can just go through it. Like, these are just the information return which we are going to understand in our upcoming chapters, right? So see, W-2 is our wages. This we all know. Gambling income. If you're going to earn some gambling winnings, who are going to issue it? It's just like a just like which form I can say, TDS form. Okay, those who are going to pay, they are going to cut the TDS and deposit it to the government. Same way, those who are going to pay the amount to the other party, they will issue this form and they are responsible for depositing it to the IRS. So wages, same way, gambling winnings, the casinos are there. Okay, they if you find that the taxpayer has earned a huge lottery or an amount over there, the casino will issue a W-2G form to those taxpayers. And they have the system like on the spot. Let's say you're taking the whole winnings, you will receive the W2G form from there, or you can get it on the email or like that. Okay, now please remember, those who are learning the US taxation for the first time, for them a simple shortcut is there. All the 99 forms are income related, all the 98 forms are expense related. Okay, so if you're earning proceeds from broker and barter exchange transaction, this is nothing but sales and exchange of shares and securities. If you have invested in some stock market, right, you might have a broker who is handling the sales and purchase. Let's say Motilal Oswal is there, okay, a common name. So those brokerage company are going to issue you 1099B. You can remember like this, 1099B is issued by the brokerage company when you transact into shares and securities. Okay, they will issue a whole document, a whole list of transaction during the whole year, and this all are issued annually. Yeah, guys, please remember this. Annually they are issued because you are going to file the return at the end of the year. So include all the 1099, 98 in your tax return. Now, please remember one thing, all these returns are filed in 3 copies. Copy A, copy B, copy C. And some of them are having numerical copies. Copy 1, copy 2, copy 3. Okay. So copy A will go to the IRS. Copy B will go to the person who is actually receiving it. Okay, the receiver. And C will go to the person who is issuing it, okay, the issuer, for their records. And these 2 people will have to maintain this document for 8 years. The limits are there. How many number of years you have to maintain the documents, the penalty, everything is there in part 3. Okay, so just remember, when you're issuing this 1099, and if you have already filed 1 copy to the IRS, they are having it in their system. Now, if you forgot while preparing the return, if you forgot to include this in your tax return as an income, you will straight away receive a system generated notice. Okay, clear, guys? So 99s are for income. 1099C, C as the word suggests, C, it's cancellation of debt. Okay, if your loan has been waived off by some banking institution, or anyone has waived off your previously applied loan, okay, all the outstanding amount, whatever has been cancelled or waived off, will consider as your income, because now you don't have to pay anything. So that is cancellation of debt, that will be considered as your income, and it will fall under other income. 1099 DIV, as the word suggests, dividend. If you receive any dividend. G is government payment. If government is going to pay you some interest or some this refunds, they will also issue a 1099G. There everything is interlinked with some document. Nothing, even in cash transactions, there are limits. Okay, so everything which is done online, all the type of transactions have a separate forms. Here in India, we receive interest income, right? How we report it on the tax return? By looking at the passbook, this much interest income we have received. Except if the TDS is deducted on a huge interest income, huge interest earning, then it will be automatically reflected in the software. But here, in case of US taxation, even for a $10, the limit of interest, 1099 INT issuance is $10. Even for $10 also, you'll receive a document. Okay, and it is been registered with the IRS, so there is no chance of altering the income after once it is reported to the IRS. Okay, clear, guys? So 1099 INT, 1099 K. K is for online payments. Let's say I am using a credit card transaction, a credit card portal machine for receiving the fees from you guys. Okay, so that credit card machine is going to deduct certain amount, that certain commission, and they'll pay me, okay, the remaining part. So when they are paying me, they are the issuer and I am the receiver. When they're paying me my money only, still they will issue a 1099K, that is third party network transaction. I am using, for example, HDFC's network, so HDFC is going to pay me the amount. Okay, clear? So they will issue 1099K. Next one is MISC and NECs. These two you can understand together. MISCs and NECs, those who are not an employee. Okay, let's say I am working on a contract basis. So I'm not their employee. Okay, I'm just working on a contract basis. Let's say I'm involved with one of the institution, just providing these services of teaching, but I am not their employee. I'm just providing it on the contract basis. So they are going to pay me income. They are going to pay me some fees. For that fees, they will issue me NEC, that is non-employee compensation. I am not the employee, but still I'm receiving compensation from them. It is a non-employee compensation. Now we will understand that in that topic, NEC is bifurcated into 3-4 categories. Type of employees, what kind of category it is: statutory employee, non-statutory employee. Okay, so these are 3-4 categories you'll understand in that. Miscellaneous income means being a let's say I have invested in a rental property and I have rented it out to some family, or maybe for commercial purpose, business purpose. I've rented it out to someone else. They will be paying me something for rent. Okay, in the name of rent, they will be paying me. That payment also is known as income for me. So they will be issuing a MISC for that payment. Miscellaneous, anything which is not falling under all the categories but is paid by a person, then they'll have to issue a 1099 MISC. Clear, guys? Okay, next is OID, original issue. Yes.
MIC is only used for the rental rents we receive from the tenants.
Not only for rent, there is a huge category. Okay, we will see that in the income topic. The category of income, if you're going to earn and if it is more than $600, okay, then you'll have to issue an MISC and NEC also. Okay,
Both
the
are having
category,
this limit.
yes, both are different. Okay, so these are the types of form. Then we have a taxable distribution received from corporatives, PATR, that is patronage dividend. Okay, OID is something which we will see when we do the dividend topic. Original issue discount, just like bond. Okay, when you issue a bond, and then at that time you receive a discount. Okay, indirectly it will be considered in your income, but there are certain conditions. Once it is not fulfilled, then it is included in income. PATR is patronage dividend. Patronage dividend is what? When a corporation, when the farmers are going to invest money in the in one of the organization who are looking forward just agriculture related activities, so they are going to issue a dividend. That dividend is known as patronage. So 1099 PATR. Okay. Then we have is 1099Q. It is a qualified education program. Qualified education program, 1099Q is something which is a benefit, okay, for for a dependent or for a taxpayer or any spouse who is taking education, right? And if they are receiving a scholarship or if they are withdrawing money from their education saving account. This we will understand when we do the credits chapter. There is a credit allowed for education expenses. Along with that, we will see there are 3-4 different types of education saving account. So when you withdraw the money from that, the bank will issue you a 1099Q that you are withdrawing this much amount from your savings account, that is 529 plan. Because while contributing, you might have taken the deduction. You have taken the adjustment to income for contributing the amount in the education saving account. Now, when you're withdrawing, it will be liable for tax. Okay. 1099R. R is nothing but your retirement distribution. When you have saved something for your retirement benefit, okay, your pension, annuities, retirement plan, or any insurance contracts, IRA, now you're distributing, you're taking out some money from that. You're taking out distributions. Okay, so this will be considered as your you know 1099R will be issued in this situation, right? They are going to pay you the money, they'll issue 1099R that you are taking this much distribution. 1099S is when you are going to sell some property, real estate property, okay? Any building, land, which is maybe your personal use land or building. If you're selling it, still you will have to pay the tax on that. And that's why you need a 1099 form for that. Whoever is going to pay you the money, they'll issue 1099S. Usually, these are the real estate agencies who are going to execute the transactions and they issue the 1099S. Okay. SA is for health saving account. ARCA's MSA, medical saving account, health saving account. See, this has been closed nowadays, but still those who were already having a MSA account since very long, they are still continued. But now no one can contribute in MSA. Only HSA has been developed. That is health saving account. You can contribute certain portion of your income into health saving account, and when you withdraw it, it's non-taxable if you are using it for health related expenses. Okay, then the last one are the K1. Okay, this I have already explained. K1 is when you receive an income, being a partner or a shareholder, when you're going to receive an income from the partnership firm or S corporation, you are going to consider in your 1040 return. This consideration is in the form of K1. Okay, clear guys? So these are the types of filing requirement, filing forms which we have done today. Tomorrow we will be starting with the most important topic, that is filing status, right? Any question till now, guys? Anyone? Okay.
No.
So tomorrow is a working day. I hope. How many of you are working professionals over here who have joined? You can just raise your hand. Yeah. Okay, almost 50% of them are. So for you guys, will it be possible to attend the session at 7:30 a.m.? Okay, means will you be able to be available at 7:30 a.m. in morning for the next session? Okay, if yes.
Yes, Siddhi.
Okay, so Monday to Friday, we are keeping the session timing is 7:30. Okay, first 3 session are anyway the demo. Sunday session is done. Monday you can attend, Tuesday you can attend, and from Wednesday you guys can enroll into the course for part 1. This 3 days I'm targeting to complete the first chapter and some of the important credits, tax credits on Tuesday. Okay, tomorrow we'll complete the first chapter and start the credits overview and understanding the topic, right? And if you feel you have any question or anything, you can reach out to me on WhatsApp. Once you enroll, we are going to add you all into the WhatsApp group of our current batch, where all the updates regarding the lectures, all the updates regarding the doubt solving, mock exam, everything will be posted over there, right? So I hope today's session was quite useful for you guys. If you have anything for me, just let me know, ping me over WhatsApp. Anyone want to attend the part 3? We are going to start it at 4. I'm not sure the timing. Yeah, 4, I think 4 p.m. we'll start the part 3 demo lecture. Part 2, Dhrumi, we will be having it in the next weekend. On next weekend, we'll have the part 2 demo lectures. Currently, the existing batch is going on. Once I complete that batch, after that only we can start the part 2 batch. Okay? All right. So that's it for the day, guys. Have a good day. Bye. We'll meet you tomorrow, 7:30 a.m. Please join the same link. We will be using the same link. Okay.
Thank you.
Thank you, Siddhi.
Thank you, guys, for attending. Bye.
Thank you, Siddhi.
ਉਹ ਮਾਤਾ ਤੋਂ ਜ਼ਿਕਰ ਕਾਤੋਂ ਕਰਦੀ ਆ ਆਪੇ ਆਊਗੀ ਘਰੇ ਤੁਰ ਕੇ ਤੇ ਦੂਜੀ